I have a killer podcast for you guys today. Everyone wanted another episode on DeFi. So I wanted to have on one of the sharpest investors I could find who's been covering this and has been publicly ahead of a lot of the coins that have been doing really well. Think Lend, Kyber, BNT, Rune, things like Compound hitting $1 billion, Link at new all-time highs. A lot of these DeFi coins not only are the biggest movers in the crypto market, but are doing like 10, 15, 20% a day in some cases. So I know you had questions. I also had some questions because I've made a couple trades in this space. So I wanted to have on Andrew Kang. He's an investor, like I said. You can find his info right here, right next to my head, or follow him with the link right below this video. We dive into the questions you had, the questions I wanted answered. We cover it all. DeFi from an investor's perspective. Is this thing a bubble? It's the first thing I asked. I think you guys are going to enjoy this episode. We will jump right into things. I hit the big red button. Andrew, welcome to the show, man.
Thanks, Luke. Good to be on.
Yeah, man. The first thing I got to ask, this is what everyone asked on YouTube. It's what I'm wondering. The DeFi coins continue to be the best performers. They're flying. Are we in a DeFi bubble? Can you start to say that? Can investors, can speculators start to say, this looks like a bubble? Or do you disagree with that?
Yeah, I mean, there's definitely a lot of people saying that this is starting to look like a bubble. I can't disagree with the fact that, we're definitely growing very fast, and it does look like we're in the beginning stages of a bubble. But that doesn't necessarily mean that, this is a bad time to enter the market, or that, this is a time where, we should completely ignore what's going on and wait for this bubble to collapse. I think, there's obviously a lot of growth going on. And, what people tend to forget is that crypto and DeFi in particular has been kind of growing and being developed for the past 2 years. And, we are seeing some really impressive metrics out there in terms of growth of DeFi. If you look at, metrics like total value locked, that started at pretty much 0 2 years ago. And now we're, nearing or at the $2 billion mark. You look at kind of the pace of all these of all these projects that are kind of being developed right now, and the innovation that's going on and the capital that's going in there. There's definitely a lot to this space, right? It's not like the vaporware that we were seeing in 2017, 2018 with projects that were just kind of building essentially random stuff that a lot of times had very little hope of achieving any type of adoption or traction at all. Here, you're seeing real usage. You're seeing real capital being moved around, people borrowing and lending assets, people trading assets, and this technology actually being put to good use.
One of the things that I keep coming back to too, you have coins like Lend, I think is up 60, 70x, right? That's one where I kind of scratch my head and say, is that momentum going too far? Is that overvalued or whatever it is? But if you compare mainstream interest and mainstream awareness of DeFi to what we had in 2017 with general crypto investors, right? Everyone wanted to invest. Your Uber driver would talk about crypto, right? I had random friends that didn't even know I was in this, trying to give me their picks, their targets. That just isn't even happening with DeFi, right? There's a lot of crypto investors, actually, funds even, that aren't exposed. Is that? Do you think that's kind of in line? Like, what do you think in terms of how deep we are into this trend? Like, is there a way to, what ending are we in, if you had to say?
Yeah, that's a really good point. I think you mentioned the Twitter thread earlier, is that one of the really key indicators of where we are in the cycle is just kind of general understanding or general awareness across these different market groups. So, I would say right now, awareness within, our core crypto community on Twitter and YouTube, it's definitely getting higher. Mm-hmm. But, this really hasn't expanded yet to anywhere outside of this core crypto group, right? You're not going to have, or, I haven't had friends randomly reach out that aren't in crypto and, asking about what DeFi is, what yield farming is. And when you look specifically even at, some of the smarter money in the space, some of the funds and some of the financial institutions in crypto, all of them are really just starting to look at DeFi. They're starting to ask questions about, how do I understand the space? How do I be able to assess whether this DeFi project is something that I want to invest in, whether I'm comfortable putting funds into this DeFi protocol. And so it's not the same type of fervor that you saw in 2017, where people were just kind of throwing money into stuff left and right without really understanding that. I think right now people are still kind of in the stage where they're quite cautious because they, have those memories from 2017 and 2018 where, they got burned pretty badly going into projects they didn't understand.
Sure. God, who was I talking to? I think it was Chris, a couple of the guys I play poker with each week. And they were saying, man, I don't care how high these DeFi things go. I got burned so bad in 2017, 2018 that I just can't allocate no matter what. So I think there's probably a lot of those people. Before we go any further, though, talking about finding these DeFi projects, right? You've been early on a couple of these, very early on some. Been tracking this DeFi. I think a lot of people also think DeFi just started 6 months ago. It's been around for a couple of years, but now it's getting more hype, more buzz, and we're seeing momentum. But before we go any further, there probably are some people listening that want to learn about this, understand the trend, but they don't really understand what DeFi is. And we're going to start seeing it get slapped onto a lot of projects. So how would you succinctly, what's the best way to describe a DeFi project?
It's a good question. I think DeFi, that term is being thrown around quite a bit.
Oh, yeah.
And, projects are essentially, naming themselves DeFi and putting in their name just to attract attention, just to raise money when, I really wouldn't consider them DeFi. I think Celsius Network is one example, right? Where, they're essentially, a central custodian that offers borrow and lending services. But, you're giving your money essentially to Celsius and, it's under their control, right? There's no guarantee that, they can't just lose all those funds or run away with it. Not that I think they would. I think they've, established a pretty good brand in this space. But, really kind of for a project to be DeFi, you have to at least have, an element of, I think, self-custodianship and also, an element of you existing, on some public blockchain, right, where funds are, might or may not be controlled by, others, but, it has essentially the end goal of other people not controlling those funds. Because there are projects out there, where, there might be specific points of centralization where, maybe somebody has an admin key and, they can do something to the smart contract and be able to steal funds, but, they are moving in a direction where that is going to be phased out.
Sure. So at least pointing in the direction of decentralization. I just remember, what theme was it? It was probably ETH scaling was the one I saw at most. This was like early 2018. A couple of ETH, projects focused on ETH scaling, whether it was Raiden, I can't even think of the other ones, but I remember every single project started adding this to the roadmap. They're like, yeah, we're also working on, sharding. We're working on this. And it was like, I don't think, that was there a while ago. That it's completely different. So I imagine we're going to start seeing a lot of DeFi marketing plays, probably more so than DeFi actual projects. Some of the movers, like I said, land up 70x. You got synthetic. What else is probably top mover? BNT. You have comp reach the billion. What else stands out to you as like top movers so far?
Yeah, I mean, Balancer was also a top mover.
Balancer.
That was sold at around 60 cents in the private markets when they were doing their fundraising, and that went up to $20 at one point.
Damn.
Thorchain was up there. They raised something like $2 million, before they launched. And, at one point they were, trading around 1 cent, and, they're close to 40, 50 cents right now. And there are, a few others as well.
The reason I'm asking, what kicked this off, right? DeFi's been around for a while. We had Robert Leshner on the poker game, founder of Compound. And I was asking him, when did all this money start flowing in? When did all this value start getting locked up, and Compound all of a sudden flies to $1 billion? Like, how did that just happen out of the blue when things were kind of chugging along at a really slow pace for a lot of these projects? What changed? Like, why are all these things moving now?
Yeah, I think kind of like a big element to that is just attention. I think of kind of prices in crypto as being determined by just pure demand and supply of assets. And, when you have more people paying attention to this asset class, you're obviously going to have more demand for these assets, a lot more people buying them, right? I would say, the fundamentals have kind of been there for, a year or two. Some projects are obviously like more far along now than they were, 3, 4, 5 months ago. But projects like Synthetics and Aave, they've been shipping and they've had a lot of the features on their roadmap that they have now that, they had before as well. I think before you look at some assets were moving pretty spectacularly as well. So Synthetics bottomed at something like 4 cents last year, and went all the way up to, I think it was $1.50 or so earlier this year, and now it's hit a new all-time high of close to above $3.
Yeah, so some have been going longer, but it just seems like, I don't know if it was the compound hype that really kicked it off in the past month. It's like June, every single DeFi project started doing well, so much so that exchanges are now rushing to offer these DeFi indexes. I mean, that's a lot of hype to see that kind of move, like thematically. Even in the past, we've had themes that did very well, but exchanges, maybe they weren't set up to do it yet, but exchanges weren't really rushing to say, we need this index so traders or investors, whatever it is, can buy into this theme. I mean, it's pretty wild.
Yeah, I mean, exchanges are going to list whatever is going to get volume because that's how they make money, right? And there's obviously a huge need for people to be able to trade these DeFi assets. Before, I think what's an interesting dynamic is before exchanges were really strict about listing fees, whether they say there's publicly listing fees or not. And now they're definitely making some exceptions for some DeFi projects that are out there.
Yeah, because they need it for the money. It's like the exchanges now need the coin more than the coins need the exchanges, especially with decentralized routes as well.
Right, exactly. It's kind of like, there's kind of like this new hierarchy of who's able to kind of call the shots, or, who has kind of power in a lot of these situations.
Sure. All right. So we have DeFi down, some of the biggest movers. What probably changed things? The question that still goes through my head is, the information is really fragmented here. And I think people listening are, as they start to understand this theme, as it continues to kind of be in people's faces, they understand the concepts, they understand kind of the bigger projects, what they each do. The tough part about this is information being so fragmented. How the hell do you get in front of, which coin could do better next, right? What's going to be the actual next, which one has legs, which is fundamentally strong versus just a trade right now? How do you kind of sort that info? Like, is there a metric you use, their website? There has to be a couple of variables that are probably the driving factors here.
Yeah, that's a really good question. And I don't really have kind of, like an easy answer to that besides, just really spend a lot of time understanding this technology, not just at a brief level and investing in anything that has DeFi, but, actually understanding like what these protocols do, how they work. What are the nuances? How do they handle, say, I guess like, hedging in the protocol if they say they do that? How do they handle liquidations? What are the risks involved in these protocols as well? Because some of them, might make some pretty grand claims, but, it's not always the fact that, these claims are actually true. So digging into, the mechanisms behind how these products work and seeing if, they can match up to the claims that the projects make. And that really just kind of comes from, a lot of time spent digging into these projects and being able to compare them to other projects in the space that have done similar things, and kind of like the willingness to ask a lot of questions. A lot of people will just kind of briefly read through, the website or say a blog post, but it really takes just, really kind of drilling down and asking questions. And, you go to these you go into these Telegram groups or Discord groups, a lot of these team members that they're kind of happy to communicate with the community. So, I think that's one of the things that I really like about DeFi is the ability to, have this open access to founders.
I imagine that steep learning curve, though, it's definitely keeping out a lot of individual investors. They're not going to have the resources. Even if they have the access to go in the Telegram or the Discord, they probably won't understand or be able to ask those kind of questions. I imagine that's actually keeping out some funds, too. Like, not every fund is set up to even understand this tech, right? Sure, some of the bigger ones are. Some of the most sophisticated ones are the ones that have done the best for the past 2 years, some quite publicly with their picks. But I imagine there's quite a few that, they want to get in. But how the hell do you diligence something that, some of these concepts are 6 months old, a year old? Like, that probably is keeping things in check in terms of this thing bubbling up right now and ending versus like it continuing to grow.
Yeah, I mean, there's really no kind of easy formula or no textbook you can read, right? Because this field is so new and it's kind of developing as we speak. So, what I recommend to everybody really is just have that desire to learn. Don't be afraid to Google stuff that you don't know or ask questions to people that you think might have the right answer to things, and just kind of dig into the weeds. Like check Twitter every day. That's where like a lot of these kind of discussions and kind of innovations are actually occurring, or in these Telegram groups or the Discord groups. It's going to take a lot of time, but if you really want to understand these things, you have to put in that time.
One of the metrics I've been watching, you shared it, and you mentioned at the beginning of the show as well, is total value locked up. And I think this is something that everyone hears when they first hear about DeFi, that all this ETH is locked up, that's bullish for ETH, or all this ETH is locked up in Compound, that's so bullish for Compound. Is that really a good metric, right? I did a very quick study showing kind of market caps compared to TVLs, and it is a positive, almost linear relationship of the higher market cap projects do have more value locked up, and I would assume that's value being locked up driving the market cap, not the other way around. Do you think that's like a good metric? Like as people are kind of ranking them, do you think that's a valid way to look at some of these things?
I definitely think that's a really good indicator to look at, and it's something that's really easy to measure because there's a lot of websites out there already that's tracking this information. And I've even seen some people come up with metrics like total value locked compared to price, and they make that as a ratio. What I would say is that people should be careful not to look at this as kind of like the only indicator, because total value locked for, say, a lending protocol can mean something totally different to total value locked for, say, an automated market maker, right? Because, say like an automated market maker may be able to extract more value for their LPs or for their token holders that like on a dollar by dollar basis than, say, like a lending protocol like Compound. So there are some nuances to it.
And what about with Compound specific? I think Compound works like this. Correct me if I'm wrong. A lot of these platforms, the way that they're getting value locked up in the protocol is by kind of incentivizing or subsidizing people to interact, right? They're subsidizing people to borrow, they're subsidizing people to lend, so both sides of the trade get paid. That's what led to this yield farming craze. But is that kind of still happening? Like, should we be discounting and saying, not all this value will be locked up, this can't go on forever? Like, how do you think this plays out? Are people going to still be using all this stuff after it's done being subsidized?
Yeah, that's a good question. I get asked that a lot, and really kind of, my first response is, point to the graph of DeFiPulse.com and show them, hey, this is kind of, how total value locked has grown over the last 2 years. And, you can actually see that before all of this, crazy liquidity mining stuff took off, total value locked in all of DeFi was already $1 billion. And that's a lot of money, right? So, you had projects like Maker and Compound that have been out there for more than 2 years. And, they've had a lot of usage, a lot of people putting money into the systems. And essentially what liquidity mining has done is it's accelerated that growth, right? It's kind of turned that graph into a hockey stick, if you will. I can definitely see that a lot of this, some of this liquidity might leave if some of these incentives start to fade away.
Yeah.
But there's also going to be some stickiness as well, right? There's definitely new people coming in and getting familiar with DeFi protocols because of these yields, and they're going to stay around, right? Because these DeFi protocols actually offer some fundamental benefit. Maybe it's more attractive borrow and lending rates, or it's more attractive pricing, deeper liquidity, right? So I don't think that's going to go away at all.
I've been wondering, kind of to tag along on that, and excuse me if this is naive, but is there going to be one or two winners in this space, or are there going to be tons of projects? When people are investing in crypto assets, I think they think about They look at Bitcoin as potentially being a winner take all. They look at ETH, which I think is something very different. So even if Bitcoin does win as the store of value, ETH can play a very different role. But I think people even look at ETH and say it's going to be a winner take all smart contract platform type thing, right? There's not going to be EOS and NEO and ETH. People say there's only going to be ETH, right? You can agree with or disagree with that, but I think a lot of people hold that view. Do you think that's the view as well for DeFi projects, or is there going to be a compound? There's going to be a balancer. There's going to be a Rune. Are they all going to coexist, or is it going to kind of move down to a winner take all like we have right now?
Yeah, I'm of the opinion that there's definitely not going to be one or two DeFi protocols out there, just because there's so many different categories in which they function in, right? So there's borrow and lending, there's derivatives, there's spot exchanges, but even within those, there's going to be a lot of different players, either because your network effects at some point, offer marginal returns. So say, I'm looking to borrow ETH, and I'm looking at Compound, or I'm looking at Aave, which is another borrow and lend platform. Mm-hmm. Both of those platforms have a lot of liquidity for ETH, right? So it's not like, I have a preference for one or the two. Maybe I prefer one because I already have assets on that platform and it offers me like a better borrow rate for like another one.
Yeah.
For another asset, for example. Or you can look at, I guess, automated market makers. Some of them are just designed so differently from each other, where you can definitely have multiple ones play in the same space.
So there probably will be quite a few that exist, or you at least have that opinion.
Right. Yep.
All right. I was trying to get a feel for that. I think people, right? Everyone's looking for a comparison to make. When you first invest in an altcoin, you compare it to Bitcoin. That's what you know. When you first invest in a token that lives on a platform, you're probably comparing it to the platforms themselves. And I think a lot, even myself, I look at it and I say, will Balancer compete with Compound? Like, should I be pair trading the two? Like, how does that work? So that makes sense then. If they all play a different role and kind of liquidity will bounce around between them, it makes sense there would be more than one or two.
Yeah, I mean, if you just kind of like look at maybe even like the CeFi world within crypto, which is still pretty new, I guess.
Yeah.
You have multiple borrow and lend desks as well, right? There's Genesis, there's Nexo, there's Celsius, right? And then there's BlockFi as well. And kind of they all just kind of capture their different markets or regions. And they all offer, pretty much, very similar rates. But they all, they're all existing and they're all growing as well, just because this field is kind of really large. And, when you look at kind of the traditional world as well, right? There's multiple, stock exchanges, right? And they just kind of exist in their different geographies.
Yeah.
Or you look at other kind of maybe like merchant banks or any other different kind of like centralized finance and infrastructure. There's always competitors in more than one.
Sure, and they can be grouped by clientele. Right, a certain bank will only take high net worth versus you can think about a protocol like that. I imagine there's going to be some protocols that are very beneficial for whales, some protocols that are a lot easier for the average person to kind of get in, get out.
Right, exactly.
All right, that makes sense then. I think we have at least a basic understanding of what DeFi is, some of the best movers, how you can start to sort the projects and how many could exist. From a trading perspective, I can wrap my head around this, right? I spoke to Tony Shang. I had him on episode or two ago, and we talked about yield farming. You've covered a lot more of kind of the DeFi ecosystem in its entirety. As a trade, as a momentum thing, right? I get all that. Where I still have questions is like, how does this, like, why do we need this past people using it right now to make money? And you have a liquidity black hole theory, which I think will fill in kind of the longer term gaps a little bit better for me. What's the liquidity black hole?
Yeah, so this liquidity black hole is kind of based, well, I guess the foundation of it is based on this concept that liquidity begets liquidity. There are network effects to, say, really any type of financial market, whether it's an exchange or it's a borrow and lend platform. And when you start off initially as, say, like a new platform, right, you have a very hard time generating more liquidity because, you don't have incentive for traders to trade on your platform if, there's no market makers or there's no one else trading with you. But when you can actually get liquidity going, right, or when you can get trade volume going, then you're going to attract more market makers on the platform because, they see this trade volume for them to be able to make money off of. That'll increase. And when traders see more market makers joining on, they're going to start trading more. It's going to attract bigger traders because, they know they can get size off. It'll kind of loop in this very positive feedback cycle. And I think one thing that's really important to understand here is that you have to think about it in the perspective of market makers and traders, right? They have a ton of options out there, and they also always have this concept of opportunity cost. So they're always going to go to the place that I guess offers them the best opportunity. It's like, why would I put my capital on this exchange where I know I'm not going to have a lot of people trading against me? I'm not going to be making as much money.
Right.
But if I know there's a lot of people trading on this platform, I'm going to go there, right? So that's kind of what creates that positive feedback loop. And kind of dive deeper into that. A lot of these automated market maker systems like Uniswap, like Compound, right? They make it very easy for people to become market makers on the platform. And sometimes they might even incentivize people to become market makers on the platform, right? It's just kind of this, for them, it's just kind of this one-step deposit, add liquidity function for them. And so if you can incentivize people to become market makers on your platform by essentially subsidizing or paying them, right, in the short term, you can kind of artificially create this feedback loop to get more and more volume and more liquidity on your platform. And then this goes even like a step further when you have projects like Bancor or Thorchain, where say there is an asset that you need to buy to be able to provide liquidity to say Bancor or Thorchain, and the higher the price of this asset, the more value that can be locked within this protocol. So that kind of puts that positive feedback loop on steroids in a sense, where people are going to be buying more of this asset. It's going to be raising the price of that asset. It's going to incentivize more liquidity to come in. The rewards that these protocols are offering for liquidity is going to go up. Sure. And kind of the theory is that it's going to create this black hole sucking in all liquidity.
I get how it does kind of create that chicken and egg problem, right? It solves that. It does attract liquidity, and by doing that, liquidity kind of starts to bring in from outside areas. How do these protocols? How does this system beat out a centralized exchange? Right, because Thorchain's a great example. You can think about, and I think Chao Wang had a thread about this. I couldn't tell if he was kidding yesterday, but he made a good point. Even if he was kidding or being serious, he was saying, look, cross-chain protocols already exist. It's just a centralized exchange, right? I can log into Binance. I can take my Bitcoin there, move it to ETH. Now I have ETH as collateral. I could take my ETH there, convert it to something else, and I could use that as collateral. What's kind of the marginal thing that makes me say, you know what, I'm going to use DeFi instead of logging into Binance? Like, what really kind of you think moves people over the next year, over the next 6 years?
Yeah, I mean, I'm not a kind of like DeFi maximalist by any means.
Yeah.
I think, if a centralized exchange is going to offer me a better rate in terms of borrowing an asset or a better price on a trade, I'm definitely going to use that. And I think most people are kind of in that same situation. Sure. I think where kind of DeFi protocols are able to really innovate and differentiate themselves is that it's really easy to experiment with new financial systems or applications in DeFi, right? So something like Uniswap, that doesn't exist in traditional centralized exchanges, and it makes sense, right? Because there's no incentive for, say, Binance to offer their own Uniswap, because for Uniswap the fees all go towards liquidity providers. They all go towards the liquidity providers, right? So Binance has to say, do I like add a fee in there, and if I do, is that going to be still competitive against Uniswap, right? Sure. They've kind of taken that whole concept of disintermediation and eliminating rent seeking, and kind of proven it out, right? And for somebody to be able to innovate in DeFi, it's very easy, right? I don't have to get a specific license. I don't have to get approval from anybody. I can even maybe just take a library, some code that somebody has written up previously, make a few changes, and then deploy it immediately and have people interact with it with real money. So I think that's what's really exciting. I think DeFi is going to really spur on a lot of innovation in financial engineering and financial applications.
I'm glad you said that, because that does make sense to me then. Greater access, which is already happening, that does make people switch over, right? If you can only get that coin there, you can only get that feature there. And then being able to disintermediate, I think, is pretty huge too. So still in the early phases. Obviously, there's risk associated with that. I think it's, as you said, I'm not a DeFi maximalist yet either, but you can start to see, especially if liquidity black hole theory really starts to kick in, that this thing could have legs for a while, man. It's pretty exciting. I mean, this is the most exciting, I would say, the crypto market has been in a few years. Would you say? I find this trend fascinating. There's some people that still talk down. They're like, this seems ridiculous, a bubble. I'm like, dude, this is amazing. I think it's fun to watch.
Yeah, it definitely is. I think really any of the naysayers, they really just don't understand DeFi, or they just haven't looked into it deeply enough. Yeah, going back to that bubble question you had about whether this thing is gonna go blow up, or if a lot of money is going to start flowing out anytime soon. I really don't think so. If you look at the money that's going into DeFi right now, it's coming from investors that have been in for quite a while. There's a lot of new money coming in as well. But when you kind of think about the mindset of these investors, right, they're not in here for a short flip, especially the larger traders and investors and whales that I know. They really actually have a lot of faith in this technology. And when you look at their price targets, when you look at their modeling around how much this stuff is worth, we're not even close to those targets yet. And when we do get to those points, right, when traders maybe take a little bit of profit, take some money off of the table, they're never pulling this stuff out. They're always putting it into other DeFi assets, right? Whether it's a smaller cap project or it's a new project that just popped up. All this is just kind of getting recycled back into the ecosystem. I think we will see maybe a big kind of explosion, but I don't think that's anytime soon. I think this thing's going to keep growing.
You in the thread, I saw you break apart actually how this trend is attracting money in different geographies. And I've had on Defi One and some other investors that focus in Asia. And usually where they're allocating their money is a little bit different, right? They're either very optimistic on dApps or gaming or whatever it might be, when it seems like over here, we aren't as focused on that. We're just focused on Bitcoin or ETH and already bearish on some of these tokens. What's kind of geographically happening right now with DeFi? Is there any group that's incredibly bullish, and are we behind, or are we moving in different areas? What are you seeing?
Yeah, so I would say that Singapore has absolutely killed it in terms of being ahead of this DeFi trend. Not only do you have really stellar DeFi projects out there like Kyber and Ren, but you also have a lot of investors that have been in these projects really early on. Some of them are public, but a lot of them are actually pretty quiet, low key guys.
Mm-hmm.
What I would say though is China is probably like the most important thing to pay attention to, because there's obviously a huge amount of money in China, that has been in crypto and is kind of on the sidelines right now. Those guys have completely missed the DeFi trend, just because they've been a little bit of jaded, and a lot of them have gotten pretty hurt from the 2017 2018 ICO bubble, and a lot of them just aren't paying super close attention to this space right now. And when they see trends that really take off, they want to be early in them, and if they're not, they'll just kind of pass. That's kind of the mindset and the discipline has been able to keep some of these larger investors alive. Right now a lot of them are kind of struggling with this question of, is it too late to allocate or not?
Yeah.
But a lot of them are, when they get to actually learn more about the space and understand it, I'm seeing a lot of them turn around pretty quickly and realize, hey, it's not too late. I should really start allocating capital. There's a lot of actual real fundamental growth going on, and it's not just vaporware like we were dealing with the last 2 years.
Yeah, it seems like this alt season is a little bit more in slow motion. Maybe I shouldn't call it alt season. Some other people are calling it alt season. I think it's fair to say that we have altcoins doing multiples, but this is definitely, these moves are slower. They're pretty drastic, right? But it's not like 2x and then it rips right back down, or a project does 10x and then the project has to sell all their ETH. This is like a slow, sustained growth for some of these things.
Yeah, it really is. You look at some of these charts, right? They haven't been going up since compound liquidity mining. They've been going up since some of them since last year, sometimes some of them since earlier this year. And I think when we've seen previous kind of trends and bubbles, like they go up really fast up, and then they go up really fast down. Sometimes on the span of just 1 month or 2 months at a time. But this is a lot longer of a cycle.
Here's an interesting one. I don't know if I've seen your writing on this, but I imagine you've thought about it just based on how much I've seen you think about some of these other topics and problems. Do you think that DeFi is positive or negative net for Bitcoin? People love to make this argument of like, oh, if DeFi or ETH does well, is it bad for Bitcoin? And I usually look at these projects, altcoins really in general, and think that it's quite positive for Bitcoin. Right? As you stay here longer, you're probably going to be interested in Bitcoin. You're going to allocate some money there. I think it brings people into the space. I don't think really anything, I just don't see projects competing to be a store of value like Bitcoin is. I think they all play a very different role. So what would you say? Do you think DeFi is like a net positive? Some people say wrap Bitcoin's bad. What's your view there?
Yeah, I mean, I think DeFi is great for Bitcoin because, it really lets people have an alternative method to be able to monetize and to be able to make money off of their Bitcoin. Because right now, say if you want to make money off of your Bitcoin, you essentially have to do it in a custodial fashion where you are trusting a centralized exchange, or you are trusting an institution like BlockFi, right, with your coins. And kind of the mantra of the Bitcoin community is not your private key is not your Bitcoin. And what DeFi is going to be able to enable, it hasn't really done this right now yet, but there are projects working on this, is for people to be able to monetize their Bitcoin in a trust minimized way, right? So for them to be able to, not give up their private keys, for them to be able to, put minimal risk essentially in approach, say lending or say market making, and being able to make money off of their Bitcoin, right? Instead of just having it sit there.
Put their coins to work.
Incredibly exciting.
Yeah. Put their coins to work. Yeah, that's pretty wild. I like that view as well. There's a lot of DeFi ETH haters that maybe if they start to see that benefit instead of viewing it as just a net negative, they'll come around. But either way, regardless of whether or not they do, it's going to bring a ton more trading opportunities. I see Link just had all-time highs yesterday or today. There's going to be coins popping off. So I think this video, Andrew, I appreciate you coming on because there's a lot of people that they're going to have to watch this thing back. DeFi is just hard to wrap your head around, man. If you're trying to keep up with this stuff, you're not doing it full time, this is tough.
Yeah, it definitely is. I mean, it's a full-time thing for me, and I always feel like I'm constantly behind and trying to catch up. So, but that's what makes it exciting, right? And that's what gives us hope in the future of DeFi. The fact that projects are being developed so fast that we can't even keep up with it.
Definitely. And Andrew, where can they follow? Where's the best place to keep up with your stuff? I don't think you're struggling to keep up. You've been ahead of almost every single little trade I've spotted out in the space. So where can people best find you? Is it Twitter? Is it a newsletter? What's the best area?
Yeah, Twitter would be the best place. My handle is REWKANG.
Good stuff. I'll tag it right down below. If you're listening on Spotify or iTunes, be sure to follow along. He'll keep you in the loop. He keeps me in the loop. And this is a lot of fun, man. This theme is insane. So whether or not people hate it, I'm going to be trading it. Andrew, enjoy the rest of your day, man. And talk soon.
Great. Thanks for having me on, Luke.
Yep.